right, guys, we're gonna start like right now. All right, everyone. So we're gonna start right now. We're gonna have to be a little bit quiet because we're gonna start right now. So you're gonna have to go over here. All right, everyone. Thanks for coming down. We got a couple of VCs specifically in the fintech space, and a little bit Q&A. Basically, introduce yourselves and some of your background, how you got into some fintech, some general questions. You can sit down a little bit.
Sure. Okay.
It might be a while.
Great. Okay, I'm happy to start. So I'm Neil Kapoor. I'm an investor with B Capital Group. So we are a Series B venture fund with offices. I'm based up in San Francisco. We have offices down here in Southern California, Manhattan Beach, as well as in Singapore. We typically we're doing a lot in the fintech space, obviously, so looking broadly across all the various verticals. So looking forward to chatting a bit about that. We typically write $5 to $15 million investments into growing companies. So a little bit later stage than your traditional seed investor. We also have a close partnership with BCG, the Boston Consulting Group. And part of our investment thesis and value add for our portfolio companies is that we bridge the gap between startups and corporates in the form of business development, partnerships, and other sort of creation efforts. How I got into fintech? So I actually started my career about 10 years ago working in consulting and then investment banking. Had some exposure to the fintech space. Got a chance to work on a couple of capital raises and M&A transactions as well as some leverage debt financing. And ended up leaving banking and joining a fintech startup that I led business development and partnership efforts, helped to grow that business, and actually got acquired by MasterCard about 3 years ago now. And then went to business school, came out, and actually spent about a little under 2 years actually at Google doing partnerships and internationalization of our consumer payments platform. So been in it for a few years now, and then recently moved over to Mingle.
Cool.
My name's Doug. I'm with MoonShots Capital. We're a local seed Series A and focused firm, generalist for the most part, but we do have a heavy focus towards Fintech, usually from $500K to $1.5 million, late seed for big deals. In addition to MoonShots, I've been managing an IT portfolio in the CDS Health media for 5 years. Basically run a clearinghouse for prescription debt. So the easiest way to think about it is kind of like credit card processing. So when you go to a pharmacy, my team's built the software to determine how much you need to pay versus your insurance company. You've got Medicaid or government CMS coverage, how much they pay, and we do all the reporting on top of it. So a lot of parallels in the fintech world in terms of an enterprise back-end architecture point of view. And it's kind of been interesting having my foot in both camps and living in both worlds here. So yeah, that's kind of my background in fintech investing.
I'm Rob Vickery. I'm a general partner of Stage Venture Partners. So we're a seed venture fund here in LA. We're on our second fund. We invest typically at the seed stage. Our focus is B2B and SaaS and enterprise software. So we're interested in fintech is one area that we look at. I'll tell you why I'm going to be cautious about fintech, but we look at it heavily. But we've made 7 publicly disclosed investments, and it'll be 8 or 9 by the end of the year. This year, we are focused on machine learning, deep learning, computer vision, artificial intelligence, and the application towards that towards big data capabilities. We're extremely active investors. We take a board seat where we can, and if not, we will outperform every other investor on the cap table if we can. That's our background. We invest in entrepreneurs that are highly credible, that are building platforms that can only really be built today, and also people who there's a reason why we are a good investor. So connections and my background and why I'm in fintech is that my career at 26, I joined the graduate program at Lloyd's, a British banking institution, and instead of going into the usual trappings of a corporate graduate program, I went into a startup within the bank, which was tasked major strategic problem for a 500-year-old brand, which is that 1 in 3 of the UK and European population has a Lloyd's product. The other third will never do because they actually fucking hate the brand. And the third one, don't report that. And then the third one is someone who's relatively ambivalent. So we went after the third segment, the 4 of us, and we were the concept of white labeling, an archaic old institution. And we did it, and we launched a couple of very successful partnerships with the National Trust and the AA to Sainsbury's Bank, which is now one of the largest providers of financial services in England. So I enjoyed doing that for a long time. And then I moved on to the acquisition in 2008, Lloyd's and HBOS. So I got involved in the dealings with the Deloittes of this world and trying to make sure that came as well. And then it did. And then I basically came over here to the North American region of Lloyd's. So I was in charge of risk and compliance and making sure that we weren't laundering money for gun runners and through Caribbean islands. Doing all sorts of stuff. So I've been in fintech and in financial services at the coalface for a very long time. That's the reason why I'm also extremely cautious about investing in fintech, because I know how difficult compliance can be. I used to be the chief compliance officer for this. So that's my background. That's me.
So what do you guys see on some of the trends going on right now in fintech that you particularly see, look at, are interested in, or you think it's a fake trend, or what are you guys looking at the future trends of fintech?
Yeah, I'm happy to step up first. So yeah, I think it's kind of blatantly obvious to mention blockchain and ICO, Bitcoin and Ethereum right now. VCs can't ignore it. It's outpaced VC investment for year to date. Tech's pretty fascinating. Like, the benefits are incredible. Pretty nervous about kind of valuations that we're seeing in the altcoin markets right now, especially. I think Bitcoin and Ethereum, what they're doing is pretty awesome. I think that's relatively undervalued. There's a lot to come from this. I think it's kind of a massive science experiment right now. Shit's gonna blow up and people can get hurt. There's gonna be a lot of innovation that comes from this. It's gonna be really cool to see that kind of get integrated into our world and start bridging that gap and seeing how we can connect that. But yeah, it's fucking crazy. Some of these valuations, like companies raising $30 million.
Seconds.
Yeah.
Yeah, I can go next, and I'm sure Rob has a perspective as the ex-chief compliance officer of Lloyd's Bank. I think on the ICO front, obviously it's been very hot at $30 million. It seems like a drop in the bucket in terms of some of these businesses that are raising $100, $200+ million in a few hours or days. Look, it feels like a bubble to me at least, and that's just my personal opinion. I probably wouldn't touch one personally. I think the way, we've obviously been looking at blockchain as well. The way that we think about it are sort of in 3 stages, and I think, it's still a lot of open questions over here on this third panel. But the first and foremost is obviously just the cryptocurrencies themselves. So Bitcoin, Ethereum, Bitcoin Cash, Dogecoin, whatever else. There's like 180 different cryptocurrencies, I think, out there. And a lot of the value that's being created purely on the crypto side, I think, is primarily just currency speculation. So you see Bitcoin trading at 4,000 plus per coin, and just a lot of hypervaluation and hyperinflation associated with that. It's very volatile, hard to know whether it's going to sustain, and that represents a lot of risk if it were to take a downturn. In this sort of middle area that sort of blends the lines between blockchain and the cryptos are the companies that are building services on top of the crypto rails, right? So I've seen a few companies lately that are using cryptocurrencies like Bitcoin to enable things like cross-border transactions and cross-border payments, whether that be peer-to-peer, consumer-facing product, or in a B2B setting, right? So being able to transfer funds between related entities owned by, let's say, a Fortune 500 business. And I think we've gotten a little bit more comfortable there. I think we still see a lot of the very high valuations that exist just generally around the crypto space. But definitely a lot of value that can be created when you can send funds overseas using these proprietary rails and charge basically a very nominal fee compared to traditional bank transfers and other sort of means to get funds. Not only to mention that it probably takes 5 to 7 business days to get the funds from a banking company. And then over here on the right panel, just broader blockchain. I think that's just, it's a huge open white space right now. There's companies that are attacking from different angles, from looking at existing blockchains and figuring out how can we bring take away the anonymity to it, away from it, right? So being able to identify people, build like a KYC element or AML type element to it. You have other companies that are looking at how do we improve capital markets and trading? How do we streamline and frankly transform banking? I think you and I were talking about a business last week that is basically rebuilding a bank from the ground up using blockchain. So I think this whole space over here is where we're seeing a lot of interest. But again, it's still relatively early days and trying to figure out where that lies.
Aside from blockchain and crypto, because both are rich, we spend a lot of time looking at we've a lot of companies that are trying to solve the millennial banking problem, focusing on the unbanked. It's probably a reason why unbanked, but a lot of people are focusing on that space. We've pitched a lot of companies in that area. And we're also very interested in the insurance space. So we see companies that are using satellite data and drone data to be able to assess insurance risks within certain regions. And by being able to assess a certain street or a city or whatever for roof temperature using satellite data, highly interesting to us. So I'm actually much more focused on that application of data that it's not really enhanced before. So that's what we're looking at. We're highly interested.
So now we'll get into what do you guys think about some of the regulation coming in and like the reg tech side of, because it's getting pretty disrupted, pretty big, right? Like I would say the last 6 months, I probably haven't seen it this crazy in a while. But from a regulatory point of view, what do you see with the changes going on? What do you foresee? We see recently China banned out some ICOs, some other countries coming out saying, okay, let's maybe look at some regulation on the ICO or whatnot. Like, what do you guys foresee?
Yeah, actually, so living in both worlds, like from an enterprise perspective and then also from like a Wild West investing perspective, the benefits of this technology for us at CDS are undeniable to regulators. Having clear auditability to how claims are being processed, like they have people that they're giving Med D coverage to and stuff like that. They don't have to take our word for it. They can look at it. It's pure and quick auditability, and it's like we bear significant reporting costs just to build programs to provide this to them. So from that perspective, it's awesome. On the other side, this ICO shit's crazy. It's fun, right, to go to the casino, put a few checks on the board, and see if we can 100x it in a week. But it's gonna catch up. People are gonna get burned, and it's kind of gonna make the party end early. So I like seeing innovation happen. It's clearly illegal. This form of fundraising. I think it's a matter of time. We're tap dancing on thin ice right now. So partly Kansas, Wisconsin.
I welcome additional regulation to this space. I think it's needed. I know it's constrained. Protect consumers and protect the employees of these companies. Can't comment on particularly changes within China and other regions, but I think ICOs, I've been asked questions at the panels before about are VCs worried about ICOs? No, I actually welcome it. I think that it's if you're raising money through initial clean offering, you need to be aware that you're raising money from non-value added investors.
Urban gender.
Potentially
gender.
dentists in Idaho got no ability to help the company grow. So this is battle between VCs and ICOs, and I think it's a pointless battle. We exist to add value as investors, and we spend a lot of time with our founders and our portfolio companies to do the best for you. I don't think you're going to get that from an ICO. So I'll let that fight out on its own. I'm not really going to bother with that at all. But I actively welcome regulation. I think it's needed in the cryptocurrency space and even greater.
Yeah, I would agree. I mean, just on the SEC front, they've already released a couple directives here around ICOs and cryptocurrency, and it'll be interesting to see how they decide to continue to get involved here over the next few months and years. So fully agree with that. And then just to echo what Rob was just saying about being active investors, I think that is truly what differentiates venture capital money versus, frankly, your individual investor, your angel investor. that ability to actually provide a perspective and have insight into an overall market versus just an individual company sort of being in this walled garden.
So any predictions for 1 year from now? Like, what do you guys? We come back next year, we do the same thing again. What do you think is going to be the the hot thing or the disruption that you're going to be like, okay, this is what happens?
Yeah, I mean, I can start this one. I think similar to what you were talking about with insurance. There's it's already, I think we were talking about this as we walked into. I think insurance is already a hot space, right? And when you look at a value chain, there hasn't been a significant amount of change over the course of however long insurance has existed for. And now you have businesses that are using all sorts of data and advanced analytics and AI and all these sort of fancy terms that are used to basically transform how these companies are serving their consumers. And when you think about not only drone technology to assess risk and using data to better improve underwriting models and make a better informed decision and price along the overall risk curve, for an individual, you guys versus me, for example, when I'm getting my car insurance. I think there's a lot of value to be unlocked there. It should be interesting to see how that's done over the next year or two. And then I think also, maybe this was just stemmed from my time at Google, so I spent a couple of years post Google Wallet 1.0, which was a disaster for the business. I hope that's not the reason, but I assume everyone would agree with that.
It is.
Yeah. Well, so Google basically originally launched Wallet as a, inserted themselves in the ecosystem, lost a bunch of money on every transaction, and it just wasn't a viable business for them. And over the course of a couple of years, ended up pivoting away into what is now Android Pay, a much more ecosystem-friendly solution that allows banks and payment networks and merchants, both online and offline, to more easily plug into the platform. And I think that was a definite necessary awakening for Google with their digital wallet in terms of playing nice with the ecosystem that's not going anywhere anytime soon. So I think taking that lesson and sort of applying it to the startup landscape, we definitely see tons of companies that are helping Visa and MasterCard be more efficient around fraud, for example, or banks better serve their consumers, their end users, whether it be through a user experience or being able to better know their customers and do predictive behavior and things like that. So I'm interested to see how that continues and how companies continue to look at old business models and provide transformative technologies to improve the world.
Yeah, I agree with that. I think the augmentation of all the through deep learning, machine learning will revolutionize the way that we look at risk and we assess risk and we assess credit scores and how we as banks perform. And I think through the data that we're getting from satellites, again, I mentioned that again, we're throwing off a lot of data. We wear wearables at the moment, by understanding about where we are and what we're doing and how we're. For example, we saw one startup that is analyzing data from wearable devices to assess coastal erosion. Assess coastal erosion. Now, with that in mind, if you're running along a beach and you're starting to, and that tide is starting to move closer in because of rising sea levels, I wouldn't recommend building a house in Boca Raton right now. So, there's a lot of data that's coming off from these devices that are really, really important for insurance companies, for construction companies, for banks. So I'm fascinated to kind of explore what the world of big data means for financial services. I also think that my co-founder was a Series A investor into Android, and there was a reason why they were just Series A is because they couldn't get any bigger. They had to raise 50 million, and they had to be, I think they reached a $50 million valuation. They had to be bought by Google to get bigger. I think that will be the advent of a lot of fintech companies in this space. That I think the scalability is hampered when you have a small capital raise. I think a lot more acquisitions will take place because these large banks and financial institutions will see a need to catch up with technology.
Yeah, I mean, just to tack on to what you're saying, I fully agree with that. I think when you have businesses that are reliant or trying to truly change an ecosystem, they're going to require a huge capital injection to make that change, right? Or an acquisition.
Yeah.
Strategic that has just a limited capital like a tech company.
Yeah, to kind of echo what you guys are saying too, certainly everybody's, or not everybody, but leveraging and machine learning, big data, but optimize analytics and process management. It's something that we're taking very seriously. But then arm's length away from insurance. I hate to go back to like bank infrastructure, but it's so myopic to like what we do on a day-to-day basis. Like the cost of maintaining these legacy systems is like it's so heavy right now, and like they're begging for a new solution, and you're getting all of this innovation coming from the startup world. And I don't know that this is going to be a 1 year, 3 year, 5 year thing, but I think at some point you're going to see like a shift, and it's this new tech's going to come. It's going to like follow an S curve. It's going to happen really quickly, and instead of like patchwork to all this legacy banking infrastructure, you might see a quick shift. But then again, I don't know when or how quickly. I think it'll happen quickly, but I don't know when.
Think about it, millennials and Gen Zs hate going into a branch. So what does that mean? You know, what does that mean in terms of infrastructure for the future? Does that mean pop-up branches? Does that mean, God forbid, AR-related branches? Or something else where people can interact with their bank account? I don't know.
Digital mobile.
Digital
convenience.
mobile. Yeah, it's no longer digital banking, it's banking digital.
Yeah.
And I think that someone's going to solve that problem. Hopefully it's not you.
All right, well, thanks a lot, everyone. And so we're just gonna get some Q&As from the crowd. So it's gonna be like bullets hitting you.
Yes, Rob, so I have a question. So Uber hit Fetch, ad tech firm Fetch, with a $40 million lawsuit today for fraud. Is that, ad tech, I worked in ad tech for years, is ad tech kind of crashing, and is that going to affect fintech in any sort of correlation?
Yeah, I mean, I think I didn't see the lawsuit, so I'm not as familiar with what happened. I think ad tech and fintech are, so fintech obviously is so broad, right? As we think about it. Ad tech, also has like its dominant players in the space. Yeah, just a couple maybe here and there.
Small.
Yeah, exactly. So, I don't necessarily see them being necessarily correlated by any means, unless you're thinking like payment volume going through those ad platforms, which I say.
Yeah.
The issue I have with ad tech and investing in it is that the revenue multiples are just not high enough. On SaaS and enterprise software that we invest in, most companies with a ARR revenue stream, represents 10 times what that might be as a valuation or as an exit. So ad tech, I don't think generates that. I think it's probably at 2 to 3x. So can't invest in it.
And it's riddled with fraud.
Yeah, it's actually a start of something bigger, I would say.
I was, until 2 months back, I was a retail banker from brick and mortar bank. So the problem is most of the big banks have legacy problems because from 100 years they are doing same kind of business. Even the staff there is attuned to that kind of business. So, but there is a problem. We have identified that. Do you think the solution will come from outside the industry, like technology companies becoming banks, just like Tesla became a car company, which was essentially a technology company? So do you think a similar solution will come, or banks can actually break that mold of legacy issues and become a more agile organization and get into fintech as quickly as expected?
So, I have a perspective here. I think it would be difficult for a very large tech company like a Google or Facebook to become a bank. Granted, that doesn't mean they could not invest in a bank and support a bank, via marketing. It seems a little bit non-core, but you never know. And proof of a tech company getting into banking, Square just announced, I think it was a few weeks ago, that they're in Utah registering and getting a full banking license. So it'll be interesting to see what they do there, right? They've already built out their Square Capital business and seen a lot of success measuring fraud and being able to underwrite against it, the risk, using the transaction data. So it'll be interesting to see how they sort of take that to the next level and build at least the lending side of the bank around it. I think I guess will startups change banks and sort of fix it from the outside? It depends on what the bank is doing, right? Because some of these legacy, humongous banks like Chase and Citibank and Wells Fargo, they're basically just 100 little companies all under one umbrella that sometimes talk to each other and sometimes don't. So in some cases, even if you have a really innovative piece of technology coming in that could solve a lot of the pain points, you might have to get buy-in from 15 different executives, and that takes a lot of time. So
Yeah, I mean the hardest thing when we were launching white labeling was getting the internal approval. Selling it externally was so easy, but getting internal approval was nearly impossible. When you think about some of the upstarts in the bank industry, SoFi in England, I'm thinking of Metro Bank. That's a bank that has changed the face that people hate. In England, they hate the banks. That's why we did a partnership with the greengrocers, because people trust the greengrocer far more than the bank. Metro has done it again by allowing dogs in the branch, for giving them biscuits, for having no glass and Nutella. There's all these different things. So I think there's a space for an emergent bank to come in and kind of set the tone and be able to be more nimble and to work with those kind of more technology startups. But I can tell you right now, shifting a 300-year-old institution is long, expensive, painful. Who knows what that means? I mean, City National is a great example. No offense to your previous employer, but that is a bank that existed upon offering very creative terms to entertainers when they're in certain financial issues. They can't do that. They're now owned by a Canadian bank giant that is the most trustworthy one in the world. So I don't think they can. I also don't think a startup can also come in and totally disrupt. I think there's a middle ground. I think it requires somebody with a banking charter, with a ton of compliance people, and then a great partnership with a really strong tech company to come together. I think it will come about in the next 5 to 10 years.
Kind of building upon what each of them said, this is the beauty of the startup ecosystem. Like you've got, it's hard to turn the Titanic. It's not an agile ship, but when you're getting hit left and right from all these startups siphoning your customers, you get insight into what the economy wants, what people want, and then they'll buy up that tech and integrate it in, or they'll invest heavily in integrating that tech into their core line of business. So it's pretty cool. You get the entrepreneurs who get to start experimenting, and these guys can look back from afar, see what's catching, and then invest in it or scoop them up.
Have you read a book called Crossing the Chasm? Okay, if you haven't read it, you need to read it, because it's a very, very important book for people who are building fintech startups, because there is there's a great bell curve in this book, and I'll put it there actually. I'm rereading it for the 3rd time.
What's it called again?
Crossing the Chasm. And it's an incredible book.
Yeah.
And basically what it's talking about is you've got these early adopters right at the beginning, and these might be the Square customers, or they might be the VR users, or they might be someone who's just latching on to new technology. But once you hit that kind of majority mainstream, there's a chasm between the early adopters and that point. What do you do to make it easy to jump to that stage? Well, financial services has got that big problem, which is often trust and concerns about security when it comes to fintech. Right? So how do you make that jump and cross that chasm, which I think in fintech is pretty bloody big. And that's hopefully what Square is doing, because Square has been around for a long time. There's a little device that plugs into the bottom of the phone, so when you go to the farmers market, you can pay. I think they've got a pretty good shot.
yeah,
That crossing that
they
chasm.
figured out the customer acquisition.
They really have.
model.
Yeah, and I think they've got a very real chance of doing it. And with the new advent in, the new iPhones and even the old ones with Apple Pay and all these other devices and contactless payments, I think they're on the right track. But it's hard. Yeah.
From a VC point of view, making an investment, right? So a lot of these companies, software companies, just doing financial stuff, right? Especially in personal finance investments, wealth funds, whatever. I mean, the selling point is the rest of the bottom, lower fees, very cheap product, cheaper than you used to get 10 years ago, and very high acquisition costs for customers, right? So the margin is super tight. So how do you see that in terms of getting, the 5-6x multiples for the funds in those companies, right? It's a hard because I come from a different space. I did enterprise storage systems and stuff like that. And you build a product, you sell it, and you have a good margin on that. And it's a viable business. And in this space, it seems like it's a super tight race and there's a lot of competition. So how do you see it as an investment? What is the sweet spot? And pretty much they're all the same in terms of how they position themselves to, at least with the consumer.
You guys know, you should let me know, because I'd love to work that out.
Yeah, I prefer not to invest in businesses that are increasingly becoming commoditized, wherein it's a race to the future, and trying to look around the corner and see what the next big innovation that'll disrupt that is, or like trying to beat someone with a punch instead of squeezing margins against your competition?
Yeah, I mean, I think wealth tech is an area I haven't spent a lot of time looking at personally. But what I can say is you're right in that, in the environments where you're racing to the bottom in terms of revenue and generation, and that's sort of how you're competing is on price. It makes it challenging as a potential investment. I think that there's opportunities though to, stand out from the crowd and maybe realize that incremental revenue that you can charge or that incremental fee. And maybe it's, a better acquisition model or some premium features that you're providing. It could be, somehow integrating lending with that personal financial management, and you're making money on the credit facilities maybe, and the fact that you have full visibility into someone's saving profile and you provide recommendations or education around that, including, some lending product. Maybe that's how you sort of transform the core revenue model from PFM to lending. That's just an idea. I've also seen some models that are maybe serving rather than like going directly for consumers. Maybe they're serving wealth managers, and they might actually be able to generate a SaaS ARR recurring revenue model in that situation. But I think wealth tech is definitely challenging from that perspective.
Yeah, wealth tech represents a serious challenge to our question of why now. I mean, robo-advisors have been around for a long time. We're all paying 30 basis points to get the performance of an ETF.
Plus float on.
Plus float. And I think being a wealth advisor right now, if you were not, I'd be quite worried. I don't think people really are interested in having an advisor that's charging 130 basis points for basically 6% return. So I'd be quite concerned about that. Yeah, I'm not bullish about wealth advisory services through tech.
I'd love to hear each of your views on what's your most exciting company at the moment, whether it's a big company like Bitcoin or a small one like what stocks.
Any company or portfolio company?
Any company,
Oh.
preferably. Portfolio company if you want to
All
answer
right,
that one.
yeah, we'll narrow it
It's
down.
portfolio companies.
Yeah. So there's a local company in LA that's pretty transformative that I'm excited about. Fintech company called Reduce Pay. It, yeah, provides financial, basically receivables factoring for produce farmers in like third world countries. So if you're a farmer in Mexico, you've got, if you can't pay your workers, like as they farm your crops, basically that week, you've got risk of them taking flight and basically going farming elsewhere. So these farmers can't scale crop production and can't really leverage the full extent of their land and everything. So these guys created a software platform to basically figure out when these like receivables and inventory for their produce becomes de-risked, and then they've gone and inserted like cash flow there, created a marketplace where they could sell the produce and then just allow for it to quickly and freely flow through the supply chain and allow farmers in third world countries to scale crop production. So it's like it's such a no-brainer. I can't believe it hadn't been done yet, and they're just growing like wildfire. So that's not the sexiest business, but one that I'm pretty excited about.
That's a sexy high demand.
Yeah. I mean, the latest deal we've done, we haven't probably announced, but it's a law enforcement software platform. So it's not for fintech, but it's a platform developed here in Los Angeles by two ex-cops who have decided to try to enhance the victim engagement interaction process. So if your garage is graffitied, you'd ordinarily call into the LAPD and they'd be like, oh, fuck off, we're not going to tell you, whatever, it's graffiti, nothing's going to happen. So these guys, they've built a platform which essentially is CRM for cops that allows victims to log in, understand the status of their crime, doesn't mean they're calling into the police station. They launched with a couple of big agencies, and they reduced inbound calls by 40%, which means that the officers are out on the street 40% longer, which is really crucial. We led that deal, and Google was the only investor behind us, so we were extremely happy with that deal. So that's a good ethical one that we
Yeah, thank you. Congratulations.
Classic home, you know.
Yeah.
It'll be that one.
So, that's a great one. I was going to go the unsexy route, actually. So I think, so we're global investors. We have a team in Singapore that focuses on the Southeast Asia region. So it includes India, Indonesia, and a lot of the developing markets, Malaysia, Thailand, and some others. So I personally, I'm excited about that region and some of the infrastructure plays that exist, especially in fintech, where banking is decades behind where it is in some developed markets. So I'm actually not going to go that path. That was just something that I'm excited about. The unsexy business that we are investing in that I'm actually really bullish on and have seen a lot of traction today is a company called iCertis. So we invested in this business, and basically what they are is a contract management platform. What's that? Yeah, I'm not familiar with that one, but basically they sort of take the next step from DocuSign and are bridging the gap between entities that are negotiating with each other, and then building out on the data side as well the ability to sort of track terms and standardize and figure out a way to actually enforce contracts. Because I'm sure for all of us that have done deals in the past or are actively negotiating contracts, it's great when you're going through it and redlining and making progress, and you feel great when you get that signature, and then how the hell do you enforce it, right? So I think that's one that's really cool and very not sexy. Yeah.
It's a good space. Thank you.
Any others? We're going to have to close it down pretty soon.
In the face of all the regulation that's coming up, people often equate what we're doing to what's happened to Airbnb and Uber. And unfortunately, what they dealt with was state regulation, not federal.
What are you doing? What are you doing?
No, us as in fintech.
Oh, okay. Right.
Like taking on 100-year-old regulation and saying we should do this differently. You're dealing with like an entity that has existed for 100 years, and they're slow to respond, but they have the final say. You can't go to one state and knock that pin down and go to the next state. So from an investor standpoint, have you seen anyone who is spearheading this campaign? It's going to be a political battle, not just financial or dealing with like two people, but is anyone trying to figure out how we're going to communicate our position to these people and bring them on board? Because we're not trying to hurt people, we're trying to make things better, but from their perspective, everything is scary.
Yeah, I mean, there are definitely lobbyists in DC that are handling a lot of the regulatory stuff at the federal level. We've talked to a couple firms just sort of casually to get their perspective on, for example, the Bitcoin and crypto space. Yeah, I mean, they're constantly in lawmakers' ears about what's going on and what trends are and why they should position things one way versus the other. But it's definitely a challenge. I mean, banking more broadly is one of the most regulated industries in the world. And so in addition to not only having these huge Titanic like organizations that take a year to turn right, you also have increasing regulatory pressure, and it's going to be a challenge. I mean, it's definitely something that we're going through in diligencing a business. It's definitely one of the boxes that we're ticking in terms of do we think that this company will be impacted at all by any regulatory decisions or anything that might be introduced.
Yeah, I guess candidly, and unfortunately, we're one of the fintech firms that has the relationships in place with the regulators. Like, we've got friends with other firms and can make the right introductions and stuff like that as you scale and grow. But I think it's imperative, like, if you're like a fintech company that's trying something disruptive, that you've got the right investors behind you that, like, unfortunately can pull strings, just given kind of this hairy network that we have to navigate and just kind of the way the world operates, unfortunately.
How many of you have been regulated or had an audit by the Federal Reserve Bank? I know you. Yeah, I have. So they used to come into my office for about 2 months every year. I put them in an office as far away from everyone as possible.
Oh yeah.
Make the office as ugly and as horrible as possible. And I would print every piece of documentation so they would not have, it would take them a long time. And I'd make every single staff member make sure that they kept their desk exactly perfectly clean and clear, so that these guys, when they're walking around or when they're not there, making sure there's nothing on the desk. The reason I'm telling you that is these are individuals that are not creative and are paid to say no. They will be coming. Yeah, and you will not enjoy it. But it's probably a good thing that they are coming for you. Trust me, because it will teach you. You'll be better for it. You'll run a leaner business, and you'll be far more compliant. So I wouldn't fight them too much because they're not going to go away. In fact, it's a good thing they're not going away. But make it difficult when they do come.
All right.
The
Cool.
only thing they found on me, because I used to run an international bank, was why is your bank based in the Isle of Man? Well, it's a tax haven. And they were like, so what is the Isle of Man? I'm like, well, it's a tax haven. And that was the only issue they ever found with me, and it was an embarrassing, stupid question, but I had to deal with it. There it is.
All right. Thanks a lot, guys. And so just continue networking and do deals among each other. And that's what this is all about. Thanks a lot.